The Vital Financial Management talking to you from the CME trading floor about the week ahead. Anyway, here it is, Friday coming in towards the close. Latest news headlines that are coming out before I go into what's going on next week. President Trump's added a $100,000 fee for H-1B visas, so that's probably killed that particular thing. H-1B visas are visas that allow US companies to employ specialised people from outside of this country. So basically a non-immigrant visa, but tagging a $100,000 fee along with it is just ridiculous. So it's just going to kill the H-1B completely, make it pretty much untenable. Especially when you consider, like for example, our company, we were employing somebody that was on whose annual salary was just within our budget at $80,000 a year. So a lot of people that do have these employees are no longer going to be able to afford to bring in new ones. Anyway, other than that, Fed's Daily has said the job market has softened quite a bit over the last year, and that's why he has a fairly gloomy outlook on things. While Apple is really happy about the Chinese demand for the iPhone 17 and rushing to boost production on that. On the 25th, Turkish President Erdogan will be coming to the White House to make some more deals, and Estonian PM has decided to request NATO Article 4 consultation of the Russian jets entering its airspace. There's also a Republican stopgap bill to try and avert the US government shutdown, which looms at the end of the month. But I don't know if that's actually going to happen. But we shall see. Anyway, now looking forward to next week, a little bit to talk about the FOMC. So we cut rates, but it's not going, it's more interest of how we move going forward, and everything is very much still up in the air at the moment. As far as the economy goes and geopolitical events that will have can obviously have a major impact.
Flag off to 2 by 3
on Monday we don't have anything in the way. Let's have a look. The main number out next week is going to be the PCE. This is Fed Chairman Powell's favourite indicator. Basically, if it comes in higher than expected, this will basically indicate that there's is looking at PCE looks at demand side pressure, services strength versus manufacturing weakness. So basically, if it's weaker than expected, this could reinforce calls for a more dovish tone from the Fed, whereas stronger could very much look at us not cutting again before the end of the year. The PCE comes out on the 26th, so that is Wednesday, I believe. I'll just double check on that. Oh, sorry, Friday. Sorry, next Friday is the PCE. Prior to that, we've got the GDP final, so basically the annualised number will basically it'll confirm whether or not the numbers are accurate before, so we'll see on that. But the main focus is going to be the PCE at the end of the week. We have not much in the way of earnings. Monday we don't have anything at all. I think probably the highlight is going to be Costco that comes out on Thursday. And that's about it really. I might put out a piece about that early on next week and we'll see. if there's anything interesting to look at. Now, a couple of things I wanted to show you. I do think there is one of the things is that we have to price in a higher chance of cutting, not just because we think that the economy is weaker than expected or the numbers are going to come in bigger. There's also that risk that if Trump manages to oust Lisa Cook from the Fed, it could imply that the Fed will now also come under government control and therefore lose its independence, and also consequently lower rates as these are whatever Trump's guys at the front lines, and they will make the decision. Like Marion said, there's no inflation coming from tariffs, so we went for a 50 basis point cut. Expect to see more of that if successful in ousting Cook. I do not think that the markets have built in any kind of risk as to the Fed's independence yet, but I guess that we'll have to wait and see. If he's allowed to sack her, then things could change very quickly. One of the other things I would like to share with you, bear with me, move tabs. So here, this is a big boy tab. Now, we ran a couple of scenarios where I want to look at what happens if we have higher than expected PCE and the chances of us not cutting again by the end of the year, wait until next year comes to fruition. I think there's a good chance that could happen. We've been holding. There's still a lot of uncertainty as to how the tariffs are going to affect inflation and how it's going to, and how the economy is going to act on that. Given the stance of the Fed's mandate to try and lower inflation to their 2% target, the chances that I think there's not an unreasonable chance that they could no longer cut before the end of the year. If that is the case, there are trades to do, and I'm looking at the SOFR options, and I quite like trades like this, and this one I like a lot, just because it gives a really wide range. Just to go back, we have a system, an AI system, that will go through any stock or any commodity and look at a realistic scenario as to if you get in and buy and sell. Because most of the guys that you will watch out there, if you bear with me 1 second, let's get one. Longs please. We'll look at option strategies from your entry price to expiration. But the reality is that you never hold it to expiration. You're not going to hold a bet all the way to the end, especially if it's something that you've already made a lot of money on. So our system will look at realistic scenarios as to how price to get in and price to get out as well. With that in mind, we put in a scenario here. This is looking at SOFR options, which is basically short-term interest rate. And the way this thing works for those of you who don't know, it's 100 minus the rate. So at the moment we're sitting in a 4 to 4.25 range for rates, which would come in around, if you took that off of 100, you would see futures. Sorry, I'm just listening to something else that's going on there. Anyway, so assuming no further cuts, you're looking at
So what was the base again?
This was 96. Wait, 91,
91.
92, 96. And he's still showing that small off. I know, it's in a 1/2 bit. Yeah, fine. Okay.
Anyway, sorry about that. Where was I? Oh yes, SOFR. So, okay, unchanged rates are going to imply 95.875. You take 4.125 as our midpoint, no movement with no chance going forward, then you're looking at 95.875 as your where SOFR should be. Even if they don't cut any further, there will be premium built in there for the possibility going forward, because the way the SOFR works is on expiration date, it goes out a 3-month average of what that overnight rate is. So from say December onwards, there's still going to be a chance of a cut the next meeting in January, for example. So that's going to be built in, even if they don't cut. We're on a cycle of lower rates at the moment. So with that, I think that the two potential targets on a more hawkish Fed would either be 96.12.5 or 96. If we go 96.12.5, the one trade I really like, because it covers you down a fair bit, is this one here, which is a 50, we call it 58 plus 60 plus 61 plus put fly. Basically get in, and these are including costs, just 1.2 equivalent ticks, and the idea is to get out of it around 6 ticks, just over 6 ticks. And that'll give you like a 400% return, which, given the actual odds on them doing this, is not an unreasonable trade, and it covers a wider range as well. So I like this trade. You know, I think it's a good one. We can look further down in it. And this is the other thing, is like, you know, if you look back historically on this type of trade and how far away it is from where it normally trades, it's in its 23rd percentile. So it's not bad. You can argue that it's relatively cheap. It's cheap, but recently, given that where we are, I think it is actually not a bad price to try and get in around 1.25 ticks. So that would be one trade idea. Just moving back, if you fancy a 4% as where it would likely end up, it's slightly more aggressive, going on a wider range. I think that these ones, I quite like that one there, not the top one, the 60-61 put spread. That one is a massive return. Again, getting in around 1.25 ticks and getting out of 10 from that advising. Or this lower down put fly, I think this one could move well. If you have a look at the heat map during the course of the cycle, even if we go lower, you know, fairly soon, you're going to make money, even if it doesn't quite get to where your target is. So you can see kind of like, when you get down to around the low 20s, you're going to be basically doubling your money on this particular trade. So it's not bad. Anyway, that is the two trades I like, and as I said, the focus should be watch the yield curve. How, although we're betting, we talked about shorter term rates, it's a long end that we need to be careful of. How the yield curve moves on the back of everything that's going on is going to be a good indicator of how much pressure you're going to see on the stock market going forward. And yeah, so watch the bonds and 10-year yields. If they start to rise aggressively, even in the face of potential cuts, we could be in for a rocky road. And then also to mention with the next slew of earnings reports you see, I feel that it's not going to be the headline number that is going to be the focus. It's going to be the forward guidance. What do they see going forward? And that will dictate the trend. And so when we look at a couple of the earnings going forward, as I said before, we like to look at the trends that come out of this. We're not looking to make money on the earnings report. We're looking to make money on the trend that evolves from that report. And so when we run, we're going to do one on Costco earlier on the week, so you'll have a look at that, and we'll see if there's anything worth doing in there. Anyway, other than that, today, just now, Senator Ted Cruz has been criticising, as we have said in chat, the threats made against Disney over the Kimmel Show, as everyone's calling about the First Amendment rights being violated. Got to be honest, it's not a good look for us internationally. Pushing us further and further towards authoritarianism. It's a playbook that they're running literally by them. So if you haven't spotted it yet, you need to be more aware of where the country is likely headed. And if you're good with that, fine. If not, well, unfortunately, so is the rest of the world. So there you go, being run by billionaires. So anyway, so look, if there's anything else to talk about, nothing really. NATO just said that they will convene early next week to discuss Russian violations of Estonian airspace. That is about. So anyway, have a wonderful weekend. And as always, it is always rather better. It is always better to be lucky than you. So as always, good luck trading, and best of luck next week.